Wall Street has halted its rapid rally to take a breather and revise risks. The highlight of the day is Jerome Powell's congressional testimony. Stock investors still believe in the bull's market and downplay 2 more rate hikes until the year end. Analysts suppose that the Fed's chairman will make hawkish remarks and try to assure Wall Street of a further tightening. The market will be able to solve the puzzle tonight. And Wall Street traded with a muted dynamic on Tuesday. The benchmark stock indexes retreated from multi-month highs as investors were in the wait-and-see mood. The Dow Jones displayed this weakest performance. The index sank by 245 points, or 0.72%. The Nasdaq was the most resilient and edged down by 0.16%. The S&P 500 shed 0.47% to close at 4,388 points. The indexes traded sluggishly in the midday and went down in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 4,340 and 4,410 points. The stock indexes declined on Tuesday and closed in the red as investors were fixing profits after a steady rally. The sell-off followed the Nasdaq longest rally since March 2019 and the S&P 500's longest winning streak since November 2021. Despite yesterday's losses, the S&P 500 has climbed by 14.3% this year. All three indexes closed yesterday with losses. Largest oil companies, including ExxonMobil, put pressure on the S&P 500 and the Dow Jones. The energy sector incurred the sharpest intraday fall in months, having dropped by 2.3%. The signs of a waning demand in China pushed oil prices down. Fears of a slowdown in the global demand resurfaced after the People's Bank of China cut key bank rates to bolster flagging demand. Of the 11 major sectors of the S&P 500, all except consumer discretionary stocks closed in a negative territory. In a corporate news, shares of rivals Ribbon Automotive and Tesla shares rose by 5.5% and 5.3% respectively after Ribbon announced it had agreed to adopt Tesla's charging standard. Nike shares shed 3.6% after Morgan Stanley said it expects pressure on margins from the company's excess inventory. US-listed shares of Alibaba Group fell by 4.5% after the e-commerce company announced that Daniel Zhang would step down as a CEO and chairman to focus on the company's cloud division. Adobe shares lost 1.9% after reports that European competition authorities are preparing to investigate the firm's deal to buy cloud-based design platform Figma, and FedEx shares stumbled by nearly 5% in extended trading after the company posted weak quarterly results. Futures on the US stock indexes continued their flat trading in the red zone as investors became cautious ahead of the Federal Reserve Chairman Jerome Powell's keynote speech in Congress, and Powell is due to give his semi-annual monetary policy testimony before the House Financial Services Committee on a Wednesday and Thursday, and is expected to be asked if rates will rise again in July. Powell's colleagues were quiet on a Tuesday, but confirmed that they would follow the ongoing course until inflation returned to its 2% target. This was echoed by Jerome Powell, who in his prepared statement noted that inflationary pressures continue to be high, and the process of bringing inflation down to 2% suggests a long way to go. Markets still expect only one 25 basis point rate hike in July before the year end, according to the CME Group FedWatch tool. The coming days of hearings could change market bets, even though U.S. headline inflation eased to 4% in May for the first time in more than 2 years. There are still a few signs that the economy is gaining momentum. In May, the number of homes under construction in the U.S. rose to the highest in more than 3 decades, according to data released on Tuesday, while the number of building permits also increased. In addition, Goldman Sachs said that there is a 25% chance of a U.S. recession. In this context, the S&P 500 is expected to rise to 4,500, about 2.5% above current levels. Tesla gained 1.4% in a pre-market as Texas requires EV charging companies to include both the Tesla standard and the nationally recognized CCS if they want to participate in the state's highway electrification program using federal funds. FedEx shares stumbled by 2.8% in a pre-market trading after the delivery company's quarterly profit fell short of expectations. It also said that the global slowdown in delivery services had hurt the sector's margins. Cryptocurrency firms including Coinbase, Riot Platforms, Verifone Digital and Bit Digital surged by 2.5 to 6.7% as they tracked the rise in the Bitcoin price. Last but not least, comments by a number of Fed officials are expected today, including Austin Colsby and Loretta Mester. The currency market is still going through a storm where the US dollar index is the only beacon. The index is trading water at around 102.6, an uptick higher from yesterday's levels, and today Jerome Powell could give the US dollar fresh impetus. The intraday CAD for the instrument is seen between 102.10 and 102.90. The US dollar gained ground ahead of the Fed chairman's congressional testimony. The Fed's leader is expected to voice the hawkish rhetoric and convince the market that the central bank needs more rate hikes this year to tame stubborn inflation. Interestingly, the inflation dynamic in the United States is not as dismal as in the UK, and the British annual CPI remained flat at 8.7% in May, defying expectations for a slowdown. In light of the news, the pound shed almost 0.3% against the US dollar. Importantly, the Bank of England, the ECB and the Bank of Canada look more hawkish than the US Fed, and only the Reserve Bank of Australia has softened its hawkish rhetoric since Tuesday, in theory. Despite last week's pause, Fed officials were still surprisingly aggressive in forecasting further rate hikes of another 50 basis points by the end of 2023. However, the market no less stubbornly neglects that forecast. That's why it's important for investors today to see if Powell makes a convincing case that the Fed is serious about raising rates by another 50 basis points. Alternatively, he might say that the agenda is data-driven. One of the two ideas in his testimony will give impetus to the dollar index, at least in the context of the next few days. The Canadian dollar remains at comfortable levels, having inched down by 0.1% in midday, and the USD CAD pay is trading at 1.32 10, and the instrument is likely to hold in the intraday CAD between 1.3190 and 1.3250. As we said earlier, the Bank of Canada is clearly more hawkish than the US Fed. Moreover, Red-hot retail sales data reinforced their faith in a more resilient Canada's economy. Non-auto retail sales in Canada rose by 1.30% month-on-month, rebounding from a 0.4% drop in March and beating 0.4% growth forecasts. In addition, retail sales grew by 1.1% from a minus 1.5%, beating the market forecast of a 0.2% increase. As for oil prices, they stabilized on a Wednesday. Futures for Brent crude rose by 0.3% to $76.12 a barrel, while WTI futures appreciated by 0.8% to $71.77. Some support for oil prices came from a possible drawdown in the U.S. crude inventories, according to a preliminary poll of analysts. Official data on the U.S. oil inventories from the American Petroleum Institute Industry Group will be released later Wednesday, and the Energy Information Administration will report on Thursday. The crypto market perked up today, at least speaking about Bitcoin. It surpassed the level of $29,000 for the first time since late May. The token has grown by 11% over the last week. It's trading at $29,100 at the moment of recording this video. Popular altcoins are trading mixed, but most of them followed suit and rebounded. Ethereum, Solana, Ripple and Cardano gained from a 0.16 to 3.2% respectively. Litecoin and Binance slipped by 0.8% and 1.7% respectively. The rapid growth of Bitcoin is partly due to the launch of a new digital exchange, ADX. On a Tuesday, ADX Markets announced the successful launch of its digital asset market and the completion of an investment round with the new capital partners. In addition, the hype around the launch of a Bitcoin ETF adds optimism, since BlackRock competition to launch a Bitcoin spot ETF has intensified as Invesco and WisdomTree filed their applications to the Securities and Exchange Commission for their own Bitcoin ETFs. On a Tuesday, WisdomTree filed an application with the WisdomTree Bitcoin Trust asking the SEC to allow it to list its fund on the CBOE exchange under the ticker BTCW. The firm, with $83 billion in assets, has previously applied for a spot Bitcoin ETF twice. The first application was rejected by the Commission in December 2021 and her second in October 2022. Similarly, Invesco applied for the Invesco Galaxy Bitcoin ETF following WisdomTree. In a document informing the Commission of the proposed rule change, Invesco demanded that the financial regulator allow its Invesco Galaxy Bitcoin ETF product to be listed on the CBOE exchange. To complete the picture, Cathie Wood, CEO and Chief Investment Officer of ARK Invest, shared her optimistic view on Coinbase in an interview with Bloomberg. The investor explained that she believes the SEC's auctions would make Coinbase the leading Bitcoin exchange in the United States if Coinbase wins the legal battle. She highlighted the difference between criticism Coinbase and Binance, saying that Binance can deal with the more serious allegations. Wood expressed confidence that Coinbase will overcome these difficulties and surpass its main competitor. Let's discuss the intraday forecast for Bitcoin. Judging by the technical indicators, the high of $30,000 is not far off. Of course, the token may fall to 28,700 intraday and lower to 28,000, but an alternative scenario looks like an increase to 29,200. If this level is overcome, the door will be open to the landmark of 30,000. Thank you for watching, and we closely monitor the markets and provide you with the up-to-date financial information and analysis. We are waiting for your questions and comments. Subscribe to our channel and see you online tomorrow.